All right, I don't want to keep any or everyone too long here. So maybe we can get into just some quick introductions. So thanks everyone who's here today for this episode of FuruRadio around derivatives. So we're joined by Yenwen from Perpetual Protocol, Seraph maybe here from GMX. I believe that's her or they, and we're waiting for one more from OPYN. But Yenwen, maybe you want to just provide a brief introduction, a little bit about yourself, how maybe you got into crypto, and a little bit about Perpetual Protocol.
Yeah, sure. Thanks for the invite, and it's great to be here. I'm one of the co-founder of Perpetual Protocol. We start from 2020. We are kind of like one of the first on-chain derivative exchange that working on perpetual swap, which is kind of like a specialized, kind of like a little bit like future contract, kind of like derivative. Um, we built on top of AMM, so we have our own design of the AMM on V1, and then on V2 we actually built on top of Uniswap V3, so we kind of like leverage the concentrate liquidity on Uniswap V3, so that it's more capital efficient. Yep. So since then, I think we got like around maybe like 60 billion like trading volume, like combined like V1 and V2. Yeah. So if you want to check it out, I mean, the website is like perp.com, perp.com. Yeah. So yeah, I think that's it. Yeah. Thanks for invite.
Yeah. Thank you very much, Yenwen. Seraph, are you there?
Yes. Hi. I'm from GMX.
Hey.
So I got into blockchain a few years ago, and I was involved in GMX at the early beginnings from Gambit days at BSC, and we lasted until BSC there were some issues, and then we migrate to Arbitrum, and as you know now GMX is pretty stable, and we are working towards the version 2, the GMX synthetics. Yeah, that's about it.
Cool. Yeah, thanks for being here, Seraph, and I'd love to hear more about GMX V2 later on. But yeah, it looks like we won't have anyone here from OPYN, but that's okay. If they join later on, we can kind of continue on. So thank you both for the introduction. I just want to maybe go into just for the basics of people that may not understand what are derivatives and kind of why are they important. Why are protocols looking to develop these things and how can it be useful to an everyday user? Whoever wants to kind of just jump in, we can kind of just talk about these topics as we go through them and see what we come up with.
Let me go first. So for derivative, I actually don't know the exact definition of that. But I think most of the financial instrument other than the spot market are considered derivative. The traditional financial system are mostly built on top. Built out of derivative. I mean, I think the biggest market of like traditional finance is option and futures actually are kind of like the two of the biggest market. And also, of course, like you have like other like interest rate swap or everything, but most of the trading volume is actually on the derivatives side. The reason of that is that financial system is really complex, and then there are like so many different needs. So like on the spot market, like you can buy. The spot that's really good, but sometimes you need like customized financial instrument to fit your needs, and then that's actually where the security come in. Like for example, the reason why you want to trade perpetual swap is that because you want to get like leverage, you want to be more capital efficient. If you only trade on spot market, you cannot do that. So I think that's the main reason that people just want kind of like go into a little bit niche, want to get that special kind of like financial instrument that fit your use case. Yep. So yeah, that's how I think about the derivatives.
Cool. No, I think that's a great explanation. And then with Perpetual Protocol, is there, or what's like the maximum leverage that you can do? And obviously you offer both long and short positions, or?
Yes. So the max is like 10x. So we only do like 10x on chain. We actually want to increase that, but the community actually pushed back on that. So we want to launch a vote, but most of people say no. Like we want to increase that to like 25 or 20x. Yeah, but it's just a different story. Like we can do more, but I think like for retails, 10x, 20x is probably the max that I mean it's down too risky for the retails. Yeah.
Cool. Thanks, Yenwen. And then how about like GMX? How does GMX fit into this? And what are your thoughts, Seraph, on, why are derivatives so important? And, why is it important to develop platforms that can support these kind of trading actions?
Yeah, like he mentioned, there's actually the current setup for traditional finance is a lot more complex. And okay, there are reasons for it, I guess, for regulation, to protect the retailer and things like that. But there's also a lot of unnecessary complication, and you see that institutes are not. We have this thinking. The government has this thinking that regulation is to protect the retail, but who is going to protect the retail from bad actors like what happened in FTX? And I am one of those guys who actually believe in FTX. I believe in SBF. So when the FUD started, I didn't take out my money. I thought, don't worry, it's just like USDT FUD and things like that. The things would go away. And in the end, no matter how good a trader you are, you won money or you hedge your position, you hedge your spot coin, you hedge it on FTX, it's all gone. So this is for us, for GMX, is that we believe that it be for derivatives for DeFi, and it'll be better off if it's on chain, that no one can control your wallet. Yeah, because FTX really taught us a very, very big lesson. Even I mean, for people like me who really don't believe in any other exchange except FTX, it was a shock. And then now we have OKX, we have Binance and things like that. Probably they have a lot of proof of fund, proof of reserve. But end of the day, we still think that it's better to trade your derivatives. For now, it's only for us. We are using GLP, and then the next one will be coming soon in March. GMX synthetics. All this will be on the chain, so people can know that where their profits are coming from. They are confident that if you trade, if you hedge your position of your coin and stuff like that, you are able to take profit into your own wallet. You control your own wallet. Yeah. So I think this is very useful. This is very useful and very important for blockchain. Yep.
Yeah, no, I think that's a good point. Yeah, it's an unfortunate event when the thing with FTX happened, but I'm kind of wondering, did that push more people to do the derivatives on chain? Have you seen an increase in volume since that kind of took place, or did that kind of push maybe more people out of the market and then it's going to take time to bring them back?
Yes, a lot of immediately after the FTX increase, right? The next 2-3 weeks, the volume increased by a lot. And actually, the ironic thing is that the volume is limited by what the capacity of a GLP. GLP is the counterbalance pool of whatever the traders are trading. So if GLP doesn't increase in size, we cannot take in more traders. And now a few real traders, they can take out almost all the capacity of GLP already. So our limitation is actually not like we have difficulties attracting traders. There are a lot of traders coming in, especially with FTX. And then last week just a few days ago, BUSD was having some issues. I still believe in Binance, but I hope Binance will survive this. But for us is we are actually limited by the GLP, and we are growing the pool with more and more people interested in stable coin. So it's not about the trader. The trader are actually is a huge amount coming in. And from next month, if the GMX synthetics come out, hopefully both traders and the capacity of the pool will increase by a lot. Yeah. So we have more interest than what we are capable of serving.
Right. Yeah, that's interesting. Yeah, I'm not sure how long the GLP pool's been out, but I came across that recently and found that was quite interesting and some decent yield there as well for people who are willing to pool their funds there to help with the trading actions. Cool. So let's jump to the next question then. Yeah. So what's, I guess, the current state of the derivatives market in DeFi? Do you guys think we're pretty early on? There's a lot of development still to happen, or like, do you think we need to attract more kind of retail or institutional, or what kind of needs to happen to take derivatives, I guess, to the next step? Because as you guys have both mentioned, derivatives is a fairly large market, well, the largest market in traditional finance. So do we see kind of that growth happening in DeFi, or, what kind of steps do we need to take to get it there, or it's just not going to happen? What are your thoughts on that?
Yeah, let me take it first. I think current status, even though, the FKX goes down, lots of people, don't trust central exchange anymore. But, the DEX market is still like a single digit percentage of the central exchange market size. So, we still have a long way to go. I think usability-wise, the DAX, still lag behind. You need to go on chain. GMX is on Arbitrum, we are on Alpinson. Some people park their funds on Polygon. They have to move their funds. There are lots of details that they need to take care of. Which bridge, lots of different things. You need to have the ETH token or have the Matic token first in order to use that protocol. So it's just lots of small little detail that make the onboarding really hard. There are lots of teams working on that. I think it will get fixed in a year or two. But right now, I think the market is still really big. For the DAX, not only the derivative, but also for the spot market. So I think that's the current status. And for the retail, of course, we build a product for the retail, for the institutional traders, for both of them. But if you look at the traditional, financial market, most of the derivatives are traded by the institutional traders. They have their needs. They trade based on their, portfolio based on their target. So I would say that we probably need more institutional traders, trade on DAX more. Most of the institutional traders I know that we talk to, they don't trade on, DAX. There are lots of different issues. Some of them, they have regulations. They need to trade against known parties, and then it's not happening on chain. Or other people, the DAX, there are lots of different kinds of risk. It's hard for them to kind of measure the risk. So there are just details that we need to work. Try to get a better solution on that. But I think in general, things will get solved, and there will be more institutional traders on chain trading derivatives. And that's my point. Yep.
Yeah, I totally agree with Yenwen also. For a lot of the centralized exchange, I mean, you have to understand that for crypto blockchain, is the learning curve for public is very steep. For me myself, it took me a while to learn how to use MetaMask, to understand gas, to understand transaction are not necessary immediate, and there's all these issues. So DEX is going to be a little bit steep learning curve for quite a lot of people. So we still need good centralized exchange like OKX, like Binance, OKX, things, all these exchange to help people to get in. Then it's like a how do I say it, a RAM. Once they know how to use centralized, they will slowly learn. It's like Bitcoin is the mother. When you know about the mother coin, Bitcoin, you start to be curious about Ethereum. You start to be curious about other alternate coin, and then you join Hotel California. You can't leave.
That's awesome. Yeah, no, I mean, it's an interesting point too, like with the regulations that, especially with this Paxos thing in Binance, it seems like a lot of with the regulations, it seems to push people into DeFi once they can kind of overcome the barrier of entry with the different chains and bridging and all that. But I think we're slowly starting to see that shift there. So it's going to be interesting to me to see where things get in 1 year, 2 years, 3 years. But I think we're heading in the right direction anyways. So I guess that we talked a little bit about the ongoing issues with adoption, but is there anything else maybe you guys want to mention and that's kind of the next question, anything else besides maybe user experience or regulations that is a potential problem for the derivatives market?
Yeah, for user experience, I agree with that, because the user experience for crypto, for blockchain, specifically for GMX, right, we have actually faced a lot of user feedback, and then we try to adjust it. They love it when our user UI UX is closer to FTX or Binance. Even though institutes or big traders or small traders, doesn't matter, they usually prefer when the interface is closer to FTX or Binance. They actually give us this type of feedbacks, and then whenever we adjust, it may not be better, you know what I mean, but people like familiar, just like our keyboard. It's not the better one, but people are familiar with it, so they like it. So I guess this is something that we learn. We want to, when people ram into sex, we want them to go into using chain. We want them to give them not too much new things to learn. Just make it very familiar to them. That's good. Hope that helps.
Also, like one thing I want to add, people might not be happy. Heard about this, but I do think that if we want to bring more institutional traders, there must be some kind of like KYC or regulated environment for the institutional traders. Otherwise, we can only onboard maybe like more like some some traders that they are very familiar with crypto everything, but that's actually a tiny portion of the overall financial traders, institutional traders. So I hate this, but that's if we want to really grow like a derivative market to 100x, I do think that there must be some kind of trade-off between the regulation and also the financial freedom.
Yeah, that's an interesting point, Yenwen, and I do agree with you on that. One thing I will say is I don't know if it has to be, mutually exclusive, or if we can just have both, a regulated derivatives market and an unregulated derivatives market for just everyday trading. Because I know one thing we were looking at when we developed the fund system for Furu combos, one question we got asked a lot was, is there going to be private funds where, you can create a mutual fund that's closed for certain investors of, an institution. So, you're a bank and you want to create a private fund that only the bank clients can invest into, right? So similar idea here, maybe there can be private derivative funds that, require certain access. You have to be a bank member or regulated or KYC'd or own a special NFT or whatever the case is, and then you can get access to that pool. But I think you're on the right track. I totally think that's where things are going to get. But again, I don't know if, we have to just have one or the other. I think we're going to have a situation where there's going to be many different markets, derivatives markets and everything.
Yeah, agree. I think that's the best cases. I mean, so like people can pick if they want to go into the market like non-KYC right now that like take your own risk, or you want to go into a KYC market or a KYC network, so that everyone is KYC, and then the institutional traders are more comfortable with that. So if we can if we can be given that choice, I think that would be much better than just like go either one.
Yeah, agreed for sure. Awesome. Thanks for that information about the ongoing issues. And I think those are all valid, definitely. Hopefully we can overcome those and continue growing the derivatives market. So then in terms of largest future users, you guys think small traders or institution or maybe some others, companies or DAOs, or what are your thoughts on who's going to kind of take the largest slice of pie when it comes to the volume or trading action with derivatives?
Okay, let me go first.
Okay.
Yeah, so like I said, I think the institutional traders are the driver of the derivative like market trading volume or the market size. But I mean the trader here, I mean there are different kinds of traders. Traders has different goals and needs. But in order for that to happen, we need the traders. I mean institutional traders, but they have different goals. Some people want to hedge the risk of of their spot holding, or some other people want to do arbitrage. We just need like more different people with like different goals, different angle enter the market, so that we can have a really active market. Yep, that's.
Yeah, I agree. Institutions have their different reasons, different ways. They can be losing money on trading here, but it is okay because it's part of their hedging, or their ways of protecting themselves against the market, stuff like that. So institutions are very different from retail. Retail are just out there to speculate, to make some money. Of course, there are retails who also hedge, who also want to protect their bigger spot, their bags of coins, stuff like that. But mostly it's institutions who have a very large, very different agenda compared to the retail. Yeah, Yenwen is very correct in this.
Cool. And do you guys think like we have the correct tooling for these institutions? Like, are they interested in, opening long or short positions on the assets that are available in the market right now? Or do we need to look at offering something that's maybe more traditional, like focusing on market index puts or calls, or certain stocks or certain currencies? Or what do you guys think on the global scale of things? Do you think they're going to be interested in coming into the market and dealing with what's available now?
Yes, I think we need more offers. I mean, so right now we are doing perpetual swap. GMX is the same. We are in the same market, but most of the institutional traders, they are looking for, like I said, they have a kind of like a use case for them. some of them they want to hedge. Some, I mean, like just a different use case. So they might need different tools for their use case. Right now, for the DEX, I think the perpetual swap is the, I mean, among all the derivative is the biggest market. But actually, options, a lot of traders need options to hedge like different kinds of risk. So option market is not big enough on DEX. So that's something that I think a lot of traders are looking for. So yeah, so I do I agree that we don't have enough offer yet. There are no people. I mean, like, there are some people doing like interest rate swap, like all these like really like advanced derivative, but there is no adoption because of different reasons. I think the market needs some time to evolve. So I'm not really worried about this, but yeah, definitely we need more different kinds of financial instrument to fit the needs.
Yeah, options is definitely one of the biggest thing to come about, and also I think forex is a huge market. Without blockchain, forex on its own has been very developed, and forex is huge, very very huge. But the problem with blockchain, other project doing forex is that they are very worried about regulation, and I guess there's reason to be worried about, because forex is sensitive. So I think forex is a good. We hope to have more players on forex, on options coming in, and then the regulators will have adapt. Regulators are usually playing catch up. So we hope that we evolve better in a responsible way also. Yeah.
Yeah, for sure. And I mean, that was one of the things I was a little excited about with Luna, was the fact that, the rewards were provided in different kind of currency tokens, which could have been, very useful for Forex. Can't remember how many different currencies you got, but it was like 30. And well, I mean, I guess that didn't pan out, but it was an interesting concept anyways. And something we're definitely going to need into the future. So we'll see kind of how that develops. But yeah, I mean, we'll jump to the next question, which is the last question. And is there any new developments that are going to be game changers for the market? Feel free to talk a little bit about, what your protocol is developing, new version, kind of what the future looks like for the next year, and maybe some new developments in the market that you think are coming that could be interesting or useful, or kind of perpetuate growth for the whole industry.
We are building GMX synthetics. I think it's an open secret. We have been building that since last year. The developer, for GMX itself, the developers are a lot of, how do I say, they like to test things and make sure it's very, very good before they launch. And we have 5 million on Immune5 for white hats to, any bugs report to us. We pay boundary out to 5 million. So the GMX synthetic has been a little bit slow, but we are launching soon. For synthetics, is just now I mentioned that we have a lot of traders, but we're not enough counterbalance GLP. Or rather, GLP is growing, but not growing as fast as the number of traders. So GMX synthetics should be able to solve that. Because once synthetic is out, right, every single any crypto asset that have interest from both short and longs will have funding rates to attract the counterbalance. And this will also help us to increase the choices from Bitcoin, Ethereum to all other alternate coins, as well as to other non-crypto assets, such as, for example, Forex, things like that. We don't know what will come, but we plan the infrastructure for it and let it evolve. Yeah.
Go ahead, Yenwen.
Yeah, sure. So for Perpetual Protocol, we actually have like a really good platform. So like I said before, we build on top of Uniswap V3. So it's provide concentrated liquidity. It's a little bit like Overbook. It's kind of like a mix between AMM and Overbook. So you actually, the LP can apply a lot of like different strategy they want to do. So I think that's really cool. We have this problem that it's a little bit hard to LP on Uniswap V3 or this SYK scale of liquidity provision. So we are actually trying to build like different solutions, trying to get rid of that. And also like one thing like we learned from GMX is like the toxic overflow that we should actually reduce it. So we are also working on other tools that help us reduce the toxic overflow a little bit. Not like 100%, but we want to decrease it maybe like 30%, like 50%, so that the LP can, have more profit, from providing liquidity. So that's one part. The second part is that it's not done by us, but there are many new research on the LP token, Uniswap LP token. So like it's XYK. So you have impermanent loss. People don't like impermanent loss because you kind of like take a losing trades, but there are like lots of new research. They actually can turn like some concepts are like what happens if you can kind of lend out your LP token and let people to borrow it. Does it actually make a different kinds of payout? There are different. And also like Panatics, they have this new concept that once you lend out your LP token or like people borrow the LP token, your payout will actually become we're actually like the payout of an option. So that's actually really cool. So, we're seeing like many new people building new, like cool kind of a concept or projects on top of Uniswap LP. I think that's actually quite interesting. I do believe that there will be a new category, like a, kind of like a more like native DeFi financial instrument in the future. So I think that's really exciting.
Awesome. No, that sounds really cool. And then, so I guess what's the best place or person to follow to learn more about the derivatives market, and then maybe learn more about GMX or Perpetual Protocol?
Sorry, I didn't get the last part. Sorry.
Yeah, no worries. Where can people follow or to learn more, or is there like a docs for GMX, or what is a good person to follow on Twitter for people to learn more about like derivatives?
We can only recommend our own Twitter, GMX. Actually, come to think of it, I don't even remember our Twitter. Give me a while. Let me double check the link, because there are a lot of scammers using fake GMX, and we always have to report it every once in a while. Give me a moment.
Yeah, for sure. No worries. It's a good idea to double check for sure.
Yeah, it's GMX_IO. Yeah, GMX_IO. So also be careful, because we have scammers. This is not just for us. Probably every group have huge amount of scammers, including on Twitter or Telegram and Discord as well. So the website is gmx.io. GMX.io is the website, and the Twitter is gmx_io. So we share a lot of our partners as well. So some of the partners, especially a lot of partners, they are using us to build their options trading, or using us to build their GLP to fold and to lend lending purposes and stuff like that. We also share their projects, so things that we are working with. So yeah, this will be a good. And from there, you can also, if you search for $GMX on Twitter, and also other other projects, you will find a lot of threads on them. Not just us, for perps, for a lot of things. I think I usually do that. I usually just search for $GMX, to talk about a competitor, $GNA, perps, things like that. You get me a lot of useful information to read up. I hope that helps.
No, for sure. Perfect. Thank you.
Yeah, for perp, you can go to perp.com, perp.com. You can learn about more about Perpetual Protocol there. We also have a learning session that explain everything like derivative, what's a derivative, what is perpetual swap, what is a funding rate, all those. I mean, like really like crypto 101 stuff. So we have that. So welcome to take a read if you are interested. Yeah, but yeah, I mean everything we have like we just put on like perpetual.com, perp.com. So yeah, please check it out if you are interested.
Perfect. Thank you very much, Yenwen and Seraph, for being here today and participating in this FuruRadio on derivatives. And if you haven't checked out FuruCombo yet, FuruCombo.app, we're like a DeFi aggregator. We got a bunch of different platforms, and you can kind of add things and chain combinations using cubes and flash loans and execute it all at one time. So thanks again. Definitely check out both platforms, learn more about derivatives. It's going to be interesting to see what the future is for that. And thanks to all our listeners for being here today.
Thanks, guys. Thanks, Lisa. Thank you. Thanks, everyone.
Yeah, thanks for having me here. Yeah, nice talk.
For sure. See you guys again. Take care.
Bye.
Bye-bye.